going on today. But I really wanted to come out and talk about how the Federal Reserve is conducting themselves when it comes to their monetary policy. And really, when you think about the credible threat theory and the things that we have talked about over the last few years, it's really becoming evident that this is what they are doing as far as trying to conduct themselves using their words and not necessarily the adjustment of interest rates. But yet the effective tool of talking about the adjustment of interest rates is having a profound impact on the economy, and you can see it taking place today. I mean, so just the simple idea that the Federal Reserve lowering interest rates going into the future that was assumed by the people out there prior to it happening was going to bring things like lower mortgage rates to the market, yet the exact opposite has happened. As the Federal Reserve has lowered rates, you see that the mortgage rates have gone up and other interest rates have gone up as well, doing quite opposite of what it is that people were anticipating taking place. So if you just step back for just a minute and just say, man, there's all these reasons, all these excuses, all these changes that have happened, and you just take into consideration for a moment that the Federal Reserve was looking for higher inflation. They wanted it. They wanted to stay higher for longer. And in fact, I had done videos years ago titled Getting High and Staying High. And this is what we are now experiencing within the economy. And again, you can lend all kinds of excuses and reasons and, whatever you want to it. But when you say, yes, they are going to have higher interest rates, they are going to remain high going into the future, and the reason why they are doing it is because they have an elevated inflation expectation in order to raise the neutral interest rate, giving them the ability to then in the future, stimulate the economy with the adjustment of interest rates, which are right now an ineffective tool because of the low neutral interest rate environment. All right, now I know that's a lot to take in, and most people who hear that are probably just like, what the hell, right? But this is the understanding that the Federal Reserve, or this is the understanding you have to have about the Federal Reserve in order to know that there is a credible threat out there about what they are planning on doing with those interest rates. But yet, if you go and you look at some of the issues that have taken place over the last year, considering what was in the market's belief at the end of 2023, everything has changed, right? But nothing has changed within the interest rate environment, except for the small adjustments that have taken place over the last 3 months. And when you think about those small adjustments within the Fed funds rate, they have not impacted the economy as of yet. But yet everything that they were talking about as far as driving interest rates to zero, remember there was going to be emergency rate cuts? You remember this? This was being deployed out there through the mainstream media, all these economists out there who believe that the Federal Reserve was heading into complete chaos issues and that they were going to have to drop rates to zero. This was a very common belief taking place out there within the mainstream media and within a lot of people. But yet, really the ultimate, or the, ultimately the amount of interest rate cutting to the Fed funds rate has been quite minimal, considering the emergency tactics deployed at the time, or was needing to be deployed at the time. So again, I just kind of step back and think about it for just a minute. It was just like, okay, so if the interest rate adjustments, if I just take into consideration that the interest rate adjustments is not the effective tool, but yet the communication about it is, think about what they are communicating right now within the mainstream media. All right? They're going to slow down on the amount of interest rate cuts that are coming. Meaning like, only 2 quarter-point cuts next year. In fact, there may even be a need to raise interest rates. So now I'm thinking, well, wait a minute here. You're already deploying information that is quite opposite of what it was that was being deployed at the end of 2023. And yet the actual deployment of interest rate cuts has yet to impact the real economy. It's only been like 3 months, right? There's another 6 months to a year down the road before we really start feeling the effects of the interest rate cuts. But yet the information that is now being deployed out there into the mainstream media as far as what the market's attention is that there's going to be less interest rates cuts coming. In fact, there could be even future raising of interest rates. And you see how this is quite the opposite effect of what is going to be taking place because of the lag period? This is how the Federal Reserve is conducting themselves, higher for longer. And if they can maintain this in a way, because there's no way that they can keep it like, we're going to get to this and we're going to stay there for, for months. It doesn't work like that. It's either going up or down, always. Okay? And if you have the market perception believing that the interest rates are going to go down, they're going to go down fast and furiously and crazy like, and everybody's out there anticipating that they're going to get cheaper mortgages, and then all of a sudden the interest rates come down and the mortgage rates go up, and people are going scratching their heads going, why is it that the Federal Reserve lowered rates and the mortgage rates went up, and then nobody wants to take into consideration that there's a lag time? That they don't go down just because the Federal Reserve has cut rates. Those two are not necessarily correlated together. And yet people want to correlate those two things together. They see it from like quantitative easings and the lowering of interest rates and the massive buying of mortgage-backed securities and all this other stuff that was taking place that is not back in the day, that doesn't take place right now. And yet people are scratching their head. Why? Why is this happening? So if you just go, again, if you were to step back and say, okay, it's the credible threat that's really guiding these markets. What it is that people are believing is coming from the future or into the future from the Fed's actions. And you can see how evident or how well it works when you take it into consideration. To know that right now, those interest rate cuts that the Federal Reserve has done over the last few months is just barely starting to impact the economy. It really won't be noticeable for another year. All right? And then at that time, think about what it is that's going to be talked about, because in a year from now, they may very well be in a position in which that they're raising interest rates, which is going to be quite the opposite of what it is that is, coming right now from the rate cuts. Many people want to think of this thing in a very short manner over the last week, 2 months, maybe even, some people might even stretch it out to 6 months or something of that nature. But very few people want to stretch it out over years or even decades. And to understand how it is that the Federal Reserve has run out of monetary policy when they hit the lower bound of zero, and that they changed the way that they conduct themselves and started using their words. And so when they started using their words and they said, hey, man, we got a problem with deflation. But nobody recognized the deflationary issues. Only the Federal Reserve. The Federal Reserve communicated it deeply that if we run into a recession, we have a very difficult time of stimulating the economy. Dropping of interest rates to get people to go out there and borrow money to stimulate the economy with was no longer an effective tool when you hit the lower bound of zero. They knew this. They knew this was coming. And so they started to develop ways of communication, and they started figuring out ways of deploying this communication that would then have the actions within the economy that they would need instead of using those interest rate adjustments. Mainly it was the perception of what the market was. It was the market perception. And it's totally working today. I mean, you think about it, like the Federal Reserve is ultimately just kind of standing still. I mean, they're unloading their balance sheet. That hasn't changed. Right? They did lower interest rates, but it's not like they lowered rates so much that it has this profound impact on the economy. And even if they were to go ahead and deploy the rest of the interest rate cuts that they are promising for the future, and they do another half an interest rate point, right? Is that going to be a huge amount? I mean, what is that going to take us down to, the 4%, high threes, something of that nature? Is that really like a significant amount from where we are today? Yeah. When the Federal Reserve said that they wanted inflation moderately above 2%, going for an average inflation rate over time, and nobody heard that, or nobody took it into consideration that that's what they were actually going to do, and here they are actually doing it, it makes me wonder, it was just like they just hid this stuff right in plain sight. They were like, hey, we're going to do it. And we're not going to, define it, because if we did, then it wouldn't work, right? So instead, they say words like, hey, our 2% goal, 2%, achieve our 2% target over time. And once you understand that language that they are using is very specific to the idea of an average inflation rate, flexible average inflation rate, in fact, with no mathematical formula for figuring it out. Once you, if you take this into consideration, I know that sounds very, illogical to say, okay, well, wait a minute here, man. A flexible average inflation rate with no mathematical formula for figuring it out. And yet I'm supposed to take that into consideration. Yes, that's exactly right. You're supposed to take that into consideration. Because if you take into consideration that it's an actual 2% target, that's not what the Federal Reserve is doing, and therefore you can't make appropriate decisions for yourself based on the monetary policy, because that's not what they're doing. All right? They're going for this flexible average inflation targeting, which means that appropriate monetary policy seeks to achieve inflation that is moderately above 2% for some time. And this is some information that I don't know why nobody else seems to talk about. I just don't get it. I really just don't get it. I have tried to say it over and over again. I thought that eventually somebody would be like picking up on it and saying, okay, man, yeah, okay, you're right. That is what they're doing. They are going for this flexible average inflation targeting over time. It's stated right there, the makeup strategy, meaning that they were going to keep interest rates extra low, extra long for an extended period of time to make sure that inflation would run hot so they can make up for the fact that they were not able to achieve the 2% target. I don't know how many times I've said that. It's just like over and over again. I almost feel like a broken record, but I don't care. This is the right information. I know it is. Everybody else is missing it. And I don't know why. Like, it's right here. It's right. Like, I mean, just look at my last two videos. I got all the information down in the description for everybody to go and scrutinize for themselves. And once you have taken it into consideration in this fashion, it becomes plainly obvious. It's just like, yeah, like totally, you know, and how long are we into this? Okay, a minute into it. We got 117 people watching. Kind of an early morning video. All right, let's kind of go up here. We got Wayne with grew up in Cloudtown. All right, I'm watching for mortgage interest rates to be at 3%. It's coming. I don't know, Trash Can Man. I mean, it might, but it ain't. I don't believe it's going to be coming soon because they want just think about the credible threat theory. Okay, you very well could be right, Trash Can Man. You're right. All right, let's just say, for example, you are right, 3%. You're awesome. How's that gonna? I don't know how they're gonna get there, but cool. Let's say they do. All right. Ultimately, from the credible threat theory, they are looking for an elevated inflation expectation to raise the neutral interest rate, so that when they do lower rates, it will be an effective tool. Right now, lowering rates is not an effective tool because even if they were to drop them to zero, stimulating the economy is not going to necessarily take place because they cannot get it far enough below neutral. The longer they keep an elevated inflation expectation, the higher the neutral interest rate will rise. Over the last few years, or whatever it has been, as the elevated inflation has come down to this semi-elevated inflation, we've had a lowering of the neutral interest rate. At least in my belief, that's what's taken place. However, with the future administration and the promise of tariffs and all the other crap that's coming from that, the elevated inflation expectation seems to be returning back to the economy. And now, as this elevated inflation expectation returns to the economy, it'll raise the neutral interest rate. This neutral interest rate will then become ever closer to the Fed funds rate. The Federal Reserve has stated many times they are trying to get the Fed funds rate to neutral. Now, if the neutral interest rate rises to the Fed funds rate or the Fed funds rate comes down to neutral, either way, that's the goal that they are intending. And at this point, they are talking about stalling out on the Fed funds rate with the idea of the elevated inflation expectation coming to the future, which should in turn, over time, raise the neutral interest rate and bring it ever closer to the Fed funds rate. That doesn't bring interest rates down. So, in my belief, in my opinion, of through using the credible threat theory, right, that I have developed over these years, this is what I am seeing happening. And now it's when you got the Fed saying, hey, well, I don't know, we might only have two, like, I don't even believe that dot plot. So don't take that into consideration. By the time we get there, things will change. Just like, they had promised, 7 rate cuts? I don't even know how many rate cuts they promised at the end of 2023. It was a ridiculous amount. Everybody was under the belief of it. And you think about it, it took forever before the rate cuts actually happened. And then when they did, it was huge. Everybody was just like a half a rate point. It's emergency. They're screwed up. They don't know what they're doing. And here it is 3 months later, and they're like, I don't know. May have to raise them. It's just like, are you kidding me? Those rate cuts haven't even had a chance to impact the economy yet, and they're already flipping the script, right? It's because it's all credible threats. Like, none of that stuff has impacted the economy yet. None of it. It's all market perception and beliefs. And it has a profound impact. Look at what it does. The belief of lowering interest rates going into the future sent the Dow to all-time highs, right? I mean, I don't know. Like, and then cutting like even the belief that they weren't going to raise or that they were going to continue to cut, or that they may even raise. I mean, look how like dramatically people take that information. None of it like impacts the economy for months. I mean, if they go into stimulus packages, that might be different, right? You take it down to zero, all of a sudden governments step in, they start doing a bunch of fiscal policy spending stuff, okay? Then that might be like, you know, a quick, you know, impact kind of, you know, kind of environment. But the lowering of rates that we have seen over the last few months, right, has not really impacted the economy yet. And that's how I find it really funny how they're like, oh man, we may have to adjust rates already. And it was just like, wait a minute, the first rate adjustment hasn't had any effect yet. And you're already talking about, you know, flipping? This is nuts, you know? But if you understand the credible threat theory behind it, then it's just like, okay, well, that does make sense. And it's a lot easier to then, you know that from years ago that they were intending on keeping interest rates elevated for a significant amount of time. Not knowing exactly how they were going to do that is the question. Like some people might be like, yeah, you're right, but you're right for the wrong reasons. It was like, regardless of whatever, you know, it was just like knowing that they were going to keep those interest rates elevated for a significant amount of time, because that's part of the makeup strategy, right? Is to be, if you're running under 2% for a significant amount of time, like they did after the great financial crisis, which is really strange for a lot of people to take into consideration. And I know a lot of times, like, even, you know, people will say something of like, that's Fed numbers, they're lying, the inflation's much higher than that. Okay, that's cool, right? I mean, I understand that, and it very well could be true. My only pushback against that is just like, are we here to try and figure out what monetary policy is? Which means that the Federal Reserve is going to be conducting themselves in a particular way, and then us figuring out what it is that we need to do in accordance to that behavior that they are going to do. And if we are going to understand that behavior, we have to understand that they are looking at particular numbers. And so by looking at those numbers and understanding what it is that they are looking at and talking about and planning on doing, we can then adjust our behavior in accordance to that. If we take in the idea that says, oh no, they're not looking at the right numbers, inflation is totally something else, and it's just like, okay, well, that's cool. Go buy into silver, go buy into gold, go buy into Bitcoin, go buy into things that are outside of the dollar so that you can be like protected from that idea. Or you can take in the idea, it's just like they have a monetary policy, an economic theory, a strategy, and that if you can take into consideration what this is, now you can understand why it is that the inflation or that the interest rates are elevated and going to stay elevated, because they had promised elevated interest rates for a significant amount of time, that they had a problem with the neutral interest rate being too low. And if you have an elevated inflation expectation going into the future, you can raise the neutral interest rate. This is very difficult to understand because it's not communicated out there in the mainstream media or anybody else out there. I am like literally the only person. But if you want to go and take the information in for yourself, just read some of the speeches that I have left in these videos. It's right there. Like, you don't need to take my word for it. You can go and look for the information yourself. And then understand that they do have this monetary policy that is different from what you're hearing on the mainstream media and being regurgitated by pretty much every single person out there who pays any attention to economics. Whether you're in favor or against the Federal Reserve, nobody takes in the idea of flexible average inflation targeting. Nobody really takes into consideration that they are trying to raise the neutral interest rate while conducting themselves at an elevated interest rate. Very few people take this, that they're going from moderately above 2% for some time. And since nobody seems to take in that kind of thought or theory about what it is that the Federal Reserve is doing, then they can't possibly be making appropriate decisions for themselves based on the strategy that they have in belief, because it's not that. Right? Now, they may have a strategy that seems very appropriate and logical and, you know, all the other stuff. Now, I get it, right? I mean, right? And the Fed, right? I'm a huge Ron Paul fan, huge Peter Schiff fan, right? Huge gold fan, huge Bitcoin fan. I understand that there is deviance and like in evilness and crap that goes on within this higher, system that is out there. I get that, right? I mean, I'm one of the biggest conspiracy theorists out there, you know. But when I find information that is within their own context, like within their own words, their own statements, that nobody else seems to talk about, there is no way that they are making this stuff up. They're not making this stuff up to fool the uneducated economists. They're not doing that. I know that. However, the stuff that they are putting out there on the mainstream media that seems to be regurgitated by every single person out there, like the 2% target, is part of their monetary policy. They said that they were going to do this. And so when I'm looking at it and I'm saying, guys, look, they're saying this. They're saying they're doing this to you. They are causing you pain on purpose, and you are blaming them for it, and they are saying they're doing the best they can. And people are saying, yeah, they can't fix it. They don't know what they're doing. I'm saying they're doing it to you on purpose. And yet you don't believe that they're doing it on purpose. But when you do believe that they're doing it on purpose, you believe that they're doing the best they can, and they can't do it. And this is the problem. They're doing it to you on purpose. They could do something about it. This is exactly what they want to do to you. And if you thought, I know people are saying, no, they know that they're causing the pain to them. They know that the inflationary pain is in existence. They know that it hurts. They look at the Federal Reserve and they say, man, you're to blame for this. And the Federal Reserve says, yes, we're doing the best we can. Sorry. We're trying to deal with the problems of the COVID past and all the stimulus and all the other stuff. We're doing the best we can. They're trying to get the elevated interest rates up to bring the inflation down. We're doing the best we can. And the people look at them saying, well, it's not good enough. And they're like, yeah, I know, we're doing the best we can. Meanwhile, they're in the back going, we're doing the best we can. Yeah, we're doing it. Elevated inflation, causing the pain, getting our neutral interest rate, getting our ammunition back. Sorry, I have to do that to you. I hope it isn't too painful. Right? This is what's happening. And as people start to recognize it for the fashion that it really is, it wouldn't work for them anymore. You want to truly end the Federal Reserve, you have to understand their monetary policy strategy in the way that they understand it. Not the way some economists is blaming them for, but to understand that they're trying to raise that neutral interest rate, that they needed you to have an elevated inflation expectation, and that sucks. Right? They needed you to have that. They needed it to exist. They needed to be persistent. They needed to be forever. Because deflation is their biggest issue. Combating deflation was quantitative easings. Combating deflation was all the forward guidance. Quantitative easing is the way that they prevent the deflationary scenarios that they so desperately are in fear of. But the inflation, no, that's what they like. They like this inflation. It feels good to them. It's like twisting the knife into and saying, oh, sorry, does that hurt? Sorry about that. We won't twist it too hard. All right? It's not good. But if you understand, then you can say, hey, man, this is the position in which that they are taking. I'm not going to be in fear of this. This is not something that I'm going to be scared of. Because most people who are in fear of inflation start to behave in a way that creates the inflationary scenario that the Federal Reserve is looking for. They want you to be in fear. They want you to be scared. And the more in fear and scared you are, the more it works in their favor. And that's what's sad about this whole situation is most people who listen to my information tell me that I'm some sort of in favor of the Fed or some kind of show for the Fed, and I'm trying to deliver information that would literally end the Federal Reserve. If everybody took on the idea of what it is that I have been trying to convey out here in my videos about what it is that they are doing with their monetary policy strategy for real, which is a mass psyops operation, and if people were to truly understand it in this fashion, coming from their own words, you don't even have to take me. Other people could probably put these speeches together and deliver the information in a much better way. I'm doing the best I can. And when I see that there is a way that we could truly end the Federal Reserve, and it's by spreading this particular information that I have put out there, and people push against me saying that I'm in favor of the Fed, I think to myself, man, no, what you are doing right now is in favor of the Fed. Having the elevated inflation expectation to raise the neutral interest rate is benefiting the Federal Reserve. It's what they need. It's what they want. It's what they were begging for. And as people are saying, dude, you're causing me pain and suffering for these elevated inflation, not talking to me, talking to the Fed, and the Fed is saying, yeah, sorry, we're doing the best we can. They're doing the best they can. They're getting it. And it's sad to see it. Let's go check out the super chat. All right, I got 5 more minutes here, and then we're going to in the video. Larry Bird, UE in the house. Thank you, Larry. I really appreciate that $4.99. You guys have always been so supportive of this channel. I know I say it in just about every video, but you know, I think about it every day. I think about what it is that's taken place, not only within the economy, but I think about what it is that's changed within my life, especially having this YouTube channel and being able to communicate a lot of this information out there to the people, and understanding that it's not easy to not only like understand this information, but then it's not easy to understand what it is that we're supposed to do on a daily basis. There's so much stuff out there. There are so many people out there who give off the appearance that they really know like what's going on, like they have this hidden agenda, information, new world order idea, this thing that is coming down to take over, you'll own nothing, be happy kind of scenario. And there's a lot of people who can deliver information like that is really good. Like, I'm not saying it's not factual stuff. Like, I followed it. I mean, believe me, I was a huge conspiracy theorist for a very long time. But the more I took in that information, the more I realized it started to deteriorate my life, because I was not thinking in a positive fashion about what it is that I could do with this information. Right? If you take in the information that this is going to hurt me, it's going to destroy me, I'm not going to be able to succeed, this is the reason why I can't make it, all this other stuff, then that's exactly the view of the world that you will see. That's what you will get. It's a direct reflection of how you are feeling. Right? And so this is why I so desperately tried to come out here daily to deliver information in a way that I want you to hope, or that I would hope that you would be able to use in your life, like be able to be useful information to you. That's it. Right? That's what I want, is to be able to say, hey, here's some information. This is the way I see it. It's different from everybody else out there. I know it's different. Right? I know it's like nobody else is delivering it like I am. Just being able to understand the theory, even if you don't believe it, to be able to take it and put it in the back of your mind as you're watching other people communicate, and you're watching what is actually taking place within the economy, you are going to hear this. You are going to hear the credible threat theory chirping in the background. You're going to hear Gresham's Law. You're going to start hearing Triffin's Dilemma. You're going to start seeing it taking place out there, and you're going to watch other people's delusional beliefs about what it is that's creating these situations, and you're going to be like, nah, this was in the making. This has been going on for a long time, and it's pretty evident that they needed particular situations to occur. How they got there is weird, but they got there, right? Like, nobody expected that these things were going to all of a sudden rise, given the ability for the Federal Reserve to have an elevated inflation expectation that they can maintain into the future, even though that's what they talked about in 2018, right? Even before that, 2001, really. Yeah. All right. Thank you, guys. UE, so are you saying the Fed are good guys trying to achieve the most... Okay, hold on. Let's back up for just a second. I don't give the Federal Reserve that sort of level of thought, right? They're not good or bad. They are a neutral to me. That's it, right? I have to take the information coming from the Federal Reserve for what it is, and then conduct myself in appropriation for that. They are not good or bad to me. Okay, let's get that started right there. Okay, so good or bad that's not part of it. All right, trying to achieve the most important goal, raising the neutral rate, and feel bad, but can help the pain it causes. No, guinea pigs are cool. I love the name. I love your guys' handles. Some of them are really good. Guinea pigs are cool. No, that's an external belief that I don't give them that much credit or power to. Right? The power is within me. I have it all. It's all mine. Right? There's nothing that I do not give them the power. I don't say, hey man, you're causing pain to my suffering. That's not something I deliver to them. Right? So because I own it and it's mine and they don't get it, right, then it doesn't matter what decisions they make. I have to make an appropriate decision based on what it is that they're doing. They're not good or bad, and they're not causing me pain. Like, yeah, I don't like the inflationary scenario that is coming from it, but yet I knew that they were going to be delivering an inflationary expectation going into the future, and if that inflation expectation was profound enough and convincing enough and delivered well enough throughout the entire economy, it would create the inflationary scenario they were looking for, especially if you double it up with stimulus packages and severing of the supply chain, right? Now, here we are, they're in quantitative tightening. We have an inflationary expectation, right? Money printer isn't going burr, right? Like when say money prices or money printer goes up, right? When money printing goes off, or, turns on, I don't know how you want to say it, right? When they increase money printing, then prices go up. That was an easy thing to say, right? Just deliver that. Everybody understands it. More quantity of money, higher the prices go. Don't need to argue that. Wash your hands of the whole idea. Now, here we are in quantitative tightening. They're literally pulling money out of the system, and we have an inflation expectation. Right? Quite opposite of the Federal Reserve. The Federal Reserve say, hey, we're pulling money. We're quantitative tightening. Right? They're in quantitative tightening, pulling money out of the system, and they have an inflation expectation going into the future. This is quite opposite of money printing, but yet it's creating the inflationary scenario. That's not, right? Other things are creating an inflationary scenario, but it doesn't matter, right? It is the fact that the quantity of money is falling. And it's not really in that sense either, because, it's really quantity of money is kind of relative to how many debt issuances can be taking place, because really it's more about like people borrowing money than it is about how much money is out there until it comes to cash liquidity issues, and then you have like banking crisis kind of stuff, but that's a whole other story. All right, let's move on. All right, thank you for coming on here and letting us poor people vent. Well, Trash Can Man, this is the place that we go to figure this stuff out as a working class individual. Somebody was just like, they were giving me a hard time on like one of my most popular videos. In fact, the most popular video I have. How long have we been out here? Okay, we got 185 people watching with 66 likes. We're 32 minutes into this video. We're going to try and keep this fairly short, so I'm not going to go too deep into this. But, a lot of people are like on this most popular video that I have ever done, talking about if you want to be rich, you drive a POS. And they're kind of making fun of me, saying, well, you're not rich. And I'm like, well, that's a matter of opinion, right? Like, what is rich? Rich is, kind of relative. Now, somebody would be like, dude, you are far from rich considering what some people have out there. Absolutely, right? I am not considering myself rich by any means, and I never really have. I very much consider myself working class, trying to struggle and figure it out just like everybody else is. I happen to have a nice little side hustle here going on YouTube, but it's not exactly like, something that is very consistent. The algorithm just screws with you constantly. The ad revenue can sometimes be quite good, especially if you have, lumber videos that are getting 20, 30, 40,000 views a hit. But then when you have no love from the algorithm and you can't figure out how it is that you can get that thing back, because it doesn't really work in such fashions, right? It was just like, if you're going to be consistent on YouTube, you're going to be consistent on YouTube, and whether or not it takes off and grows is really dependent on the information that you're delivering and how well it's being received and how popular that information is at the time. So when I was talking lumber, everybody wanted to know about what was going on there. But when it comes to this obscure monetary policy that nobody has ever really heard of being delivered from some dude sitting in a 99 Ford Explorer, I can see why it's probably not so popular, right? It's not like, I'm not trying to degrade the information. To me, it's higher value than anything else that you're going to get out there. But I do understand how come it is that something with flashy lights and studio productions and being delivered from somebody who has $100 million is probably going to be a little bit more popular than some dude sitting in a working class position trying to deliver high level information that nobody else is doing. I get that, right? It's like, whatever, I don't care. I'm going to own this too. I know it, right? I'm trying to build up my wealth. I've got what I feel is a decent portfolio, considering I had absolutely nothing 8 years ago. Buying a house, I'm pretty much out of debt. I got a little bit going on with the car payment, and, I put some on a credit card because of some medical issues that had happened in the past, and I just didn't want to give up the cash for. So, I'm knocking that out fairly quickly. I'll probably be, gone after Christmas. But other than that, I'm in a pretty decent position where I have low expenses. I try to keep my income as high as possible. It fluctuates quite a bit. I'm buying into assets and loading it up. To me, I'm I am rich. Like, I mean, compared to what I had going on, this is exactly what I wanted. This is where I wanted to be, is doing this right now with all these people, doing exactly what I am doing, traveling around like I'm going to do in February to go speak, to hang out, to, you know, encourage people to learn this stuff for themselves. This is what it's all about. This is why I'm here. And so the money is like, it's like it's almost neither here nor there. I mean, don't get me wrong, if it was gone, it would be a bummer, right? I mean, I would be very depressed about it. But even if it was to disappear tomorrow, I think about it, it was like, damn, that was pretty cool. Like, everything that's happened over the last few years, that was so rad to have that opportunity, to have everything that took place, everything, right? If it all disappeared tomorrow. But knowing that it's not, and that it does grow, and that it's, you know, at times that I'm not doing it right, I got to figure out what it is that I need to do right. And, you know, coming out here and trying to be useful and helpful and not be like predictive and accusatory or aggressive or anything, like, I don't know, aggressive, whatever that means. But in that sense, then I know that the information that I'm delivering is going to help. I know it will. Like, people will see this, look back and say, dang, man, I'm now starting to get what it is that you were trying to say. Right? As most people are feeling the Federal Reserve had completely failed, if you think about the information that they are delivered in order to try and conduct themselves in a particular fashion to keep an elevated inflation expectation, elevated interest rates in order to raise the neutral interest rate, however they get that done, right? This is what's happening. Right? And I don't know what it is that you need to do in your life in order to take this information and benefit you, because you may be deeply in debt working at some grain facility. I don't know what to do. I wouldn't know what for you to do in that position. You need to figure that out for yourself, because every single person is going to make a different decision. They made different decisions to get to where they are today, and they're going to make a different decision on how to get themselves out of whatever it is they need to do, or maybe maintain what it is that they got. Maybe they're like, no, man, I've been making all the right decisions this entire time, man. I'm nailing it, right? It was just like, in that case, you're probably not here on this video right now. Most people who are here watching this right now are trying to figure out what it is that's going on within the Federal Reserve's monetary policy, trying to figure out what it is that they need to do with their own lives, with their own decisions, their own business, their own investments, their own retirement, their own savings. Like, everything is different for every single person, and understanding how it is that the communications coming from the Federal Reserve is being delivered to the people out there for a particular reason, to create a particular narrative out there that has people conducting themselves in a particular fashion. If you look back at it and say, okay, how and why are they doing it in this way? All right? They're not doing it to be reactive. You think about it, like even the interest rate cuts that had taken place. I'm just rambling now. Okay. Even the interest rate cuts that had taken place just a few months ago have not yet impacted the economy, yet the communication coming from the Federal Reserve says that they may have to reverse their course. Right? Not that they will, right? But they may back off on the cuts, and there is some communication out there coming from some people that they may have to actually raise. Right? None of that is reality. That's all talk, right? And once the future comes, it'll be something totally different will be communicated. And once you see this, once you understand it, once you recognize it, it becomes a lot more obvious. Alrighty, guys. I'd love to stay out here a little longer, but again, we're just going to cut this one now here at 38 minutes. You guys are very awesome. Thank you so much for being here. Check out the last two videos that I've done, the last two recent live streams that we've done. They're really good. Information's down in the description of them, especially the, you know, I think both of them were really good. Like, both of them really break down a lot of what it is that's happening. And as far as, like, I don't know, I mean, I almost wish that there was other people who would talk this theory, like other YouTubers, other economists, somebody else out there to pick up on some of these things, even to discredit it. Even if they were to like, nah, man, all these speeches that you have lined up from the last 20 years leading up even to the last few months, right, to explain this theory, to break all that information down and say, nah, man, we're going to discredit and break it up right now, right? I mean, I think that would be awesome, because at least then the discussion out there would be taking place about this. And I can't even find anybody who will even be willing to do that. Right? I mean, not that I'm not looking for them, but nobody wants to try and discredit the uneducated economist. Nobody, you know, like I mean, nobody's going to debate me, right? You know, I mean, because I would tear it. I mean, I'm not to be arrogant or anything else like that. Like, I don't want to sound that way. I don't want to sound cocky or arrogant or anything like that. That's not what I'm trying to say. But if we were to try and put a debate together against any economist when it's talking about the monetary policy coming from the Federal Reserve, I really feel like I would tear it up. I don't think anybody would beat me. Okay? And because I just can't find anybody else who discusses it like I do. And so I'm not sure who would like vote on whether or not, you know, I would win the debate or not, because most people would hear that information for the very first time in the debate itself. And nobody would be able to understand what it is that I was even saying, because most people, 99% of them, would be stuck on the other economists' beliefs, and I would sound like some tinfoil hat believing sucker. Right? But I know it. I mean, I don't know what to say. Like, I cannot find anybody else who discusses it like I do. And so this is it. We're unique here on this channel. We break it down. The people who have been following me on this channel, we get it. Like, you know, there's probably a couple thousand of you. But unless we all go out there and start creating YouTube channels to deliver the information and build those YouTube channels up, those blogs up, those, you know, those social medias up in order to, you know, expose the Federal Reserve for what they're really doing, I just don't see how it's going to get out there. And we are going to be the only ones who know this. This very small, unique group of uneducated economist collective people here. All right. Uneducated economists, you guys let me know.